This is the Retirement Mentality channel, and my goal here is to change the way you think about retirement, the way you think about investing, and trying to help you get away from that daily grind as fast as possible. We talk a lot about the FIRE movement, retiring early, investing in real estate, and how we can accomplish this goal. So today, one of the biggest questions out there is what is the best way to retire early or to retire at all, for that matter, whether you want to buy stocks or you want to buy real estate. That is basically your main two options out there. And in the FIRE movement, all the articles and the blog posts and the videos all sort of gravitate towards the stock side of things. And when you go on YouTube or the internet, all of the articles that are talking about real estate have been saying they're going to crash for the last 3 years. But now the stock market has performed horribly over the past 12 months. It's down about 20%. So what are you supposed to do? Where can you stick your money? And how can you retire early? And what is the best and fastest way to do it? We're going to talk about it in this video today, right now.
Shut up and sit down.
I know this microphone maybe doesn't look super cool, but it works off the same system as my lavalier mic, and I was doing some voiceover work and it sounded better, so we're going to try it today. If I look like an idiot, leave me a comment, say put the lavalier mic back on. It sounded just fine before. But let's get into the video right now and see what we can figure out. So if you look at stocks, I mean, everybody for the past 12 years, stocks have been performing at 12, 15%. Everybody's just been seeing their money shoot up. And all of the discussion in the FIRE movement is that you just put your money into VTI or the equivalent, the total stock market index, or the S&P 500 or any of these broad index funds, and then you just chill out and you wait and you let your 12 to 15% roll in and rack up, and you live off of 4% in some Caribbean island, which I just got done doing, by the way, and you're on easy street. But nobody thought that they wouldn't see these 12, 15% returns into infinity, because that's what most people have only seen over the last 12 years. Most people haven't been investing for more than 12 years that have been into this FIRE movement and this retire early whole craze that's been going on here. So, but I'm an old man. See these gray hairs in my beard? I've been doing this for a long time. I've been in the real estate industry for 20 years. I started a mortgage company in 1998. That's how long I've been doing this. Don't let my boyish charm and good looks fool you here. So I am a real estate guy, and last year I just started putting money into the stock market because I had acquired enough properties. And I thought, I'm living off of my rental income already, and I still had income coming in because I believe in the financial independence recreational employment theory rather than the retire early period, because I wasn't ready to retire. I moved to the Caribbean island. I sat on the beach and I got bored. That's why I started this YouTube channel in the first place. And then I started a second YouTube channel. And then I got my real estate license while I was there. So at age 45, I wasn't ready to sit on the beach, even in the Virgin Islands, and just chill out all day. I would still wanted to make some money and be productive. So, okay, back to the question. So where do we put our money, Jeff? Is it stocks or is it real estate? So let's talk about what Vanguard says the stock market is going to do going forward from here. And then that can help us decide whether we want to stick more money into the stock market, which my money's down 20% from when I started putting it in there. I started putting my money in there about 8 months ago, and I'm down about 18%. I was dollar cost averaging $5,000 in every week until I hit 100 grand. And it kept going like this. And I was like, yeah, it's going down. Everything's getting cheaper. And I just kept putting more in, and it kept going like this and like this and like this. And so I think I'm probably down about 16%, where the broad indexes are down about 20%. So my dollar cost averaging, I started when it was here and I chased it all the way down to here, and I stopped here and it went down to here, and now it's maybe back up about where I stopped putting money in. But for somebody who's been investing in real estate for the past 15 years to finally start putting money into the stock market and then just see my $100,000 be worth 80 grand is very frustrating. I went broke in 2008 when the real estate market crashed. So I've lost money. I can lose money anywhere. If anybody can lose money, it's me. Okay, so let's talk about what Vanguard, the OG of the stock investing, what they say stock prices are going to do in the future. They say for the next 10 years, you should expect a return of between 4.7 and 6.7%. So if you thought you were getting 12, you're looking at 4.7 now. So everybody who's in the FIRE movement who has put their $2.5 million into their Vanguard index funds and is going to plan on living off of the 4% return rule, well, by the time they pay the taxes on the income from their withdrawals, they're already below the 4%. And when you add on inflation being at 5%, 6%, 7%, even if inflation gets down to 3%, if inflation's at 3% and your money's earning 4% and then you're paying taxes on top of that, you're still going to see that dwindling down. When Schiller did this rule about the 4% rule, nobody reads the fine print on that 4% rule, and that was only meant to be for a 25-year retirement and for people who live to the age of 85. And based on these market conditions, nobody looks that far into it. Everybody just thinks the 4% rule magically, you put whatever amount of money into the stock market and you live off 4% and it still grows. But that's not the case anymore. At least according to Vanguard, that's not going to be the case for the next 10 years. So that doesn't bode well for investing into the stock market to retire early between now and 10 years from now. On the flip side, everybody who's been predicting this real estate crash for the past 3 years, except for me, I have not been predicting it. I've been saying prices would go up, and I've been right. Prices have been skyrocketing, but everybody's still been putting out these videos and these articles and this content that says the real estate market is going to crash because that's what everybody clicks on. And the higher prices got, the more popular the articles about the real estate crash got because people were getting priced out of the market and they wanted to believe that the real estate crash was coming. So they kept consuming that and they kept waiting and they kept waiting and the prices kept going up and up and up and they just getting farther and farther away. And then interest rates went up. So now we're seeing prices dip a little tiny bit, 5%, maybe 10% in some markets. But real estate interest rates have gone from 3% to 6%. So that little 5%, 10%, even if prices come down 15 or 20%, you're not making up the difference in the interest rates you would have got if you would have listened to me 3 years ago and bought real estate when everybody else said it was a bad idea. So what do? How do you retire early? Well, maybe a mix of the two would be smart, but I still think real estate is the best and fastest way to get to retirement because you're using leverage, because you get to use depreciation, because you get to have other people pay the mortgage, and you have mortgage principal reduction. So there's just I'm maybe gonna do a whole series about this and go deeper into each one of these subjects, but this is gonna be just kind of my broad overview of this idea. And if you're interested in me breaking things down further or breaking down my real estate portfolio, or we want to see my stock portfolio to see what I did, I'm happy to show you that stuff. Just leave me comments down below. And if you're getting any value out of this, as always, don't forget to hit the like button down there and subscribe to the channel if you've never done that. Even ring the little bell and you'll know if I'm going to do a video series. If that's interesting to you, you'll know when my next video comes out. So if you look from the 10-mile up view of investing, of stock investing over here, or real estate investing over here, and you look at the 10-year out projection, Vanguard predicts also that the bond market's going to do between 4.1 and 5%, 5.1% returns over the next 10 years. So that versus the stock market at 4.7 to 6.7, it makes no sense to have the downside risk of the stock market when you could put your money into the bond market, which is just a safe place to park money and not gain wealth, not acquire wealth, not have any write-offs, not have anything, just to park your money. If you want to park your money away for 10 years, that's fine. But if you actually want to retire early or retire and you're building wealth, I don't think the bond market is the best place to put your money. I think it makes more sense to go into real estate. Even if you have smaller returns now, there's a possibility you could refinance in the future. I don't think rates are going to come down in the next 1 or 2 years. I think 5 to 7% is going to be the new normal of rates. I think that's where rates historically have been, these low 3%, 2% mortgages people were getting. That's not normal. That's not a normal market. People thought it was, and they just have to retrain their brains. You hear ask your parents or your grandparents, depending how old you are, about rates in the 80s, and mortgage rates were 18% in the early 80s. So my first house I bought, my mortgage rate was 9%. That was in like the year probably 2000. Is that about right? Yeah, probably about the year 2000. I bought my first house. I think 9.5% was my interest rate. So 6-7% is a normal market for interest rates. People just have to get used to that, and you have to figure out, prices have shot up, interest rates have shot up, and nobody thinks you can make any money. But you can still make money, and you can still. I just sold some people. I'm also a realtor, so if you want to buy real estate in the Panama City Beach area or the Gulf Coast, give me a call. I just sold some friends of mine a house for $138,000. So, they were smart, and they didn't buy the biggest house they could afford. They bought the biggest house they could live in with the smallest price tag on it. So now they can save money. They can invest money. They can save money to buy another house. Hopefully what they'll do is in a year or two, they'll move out of that house and turn it into a rental, and they'll buy another house. So you can still buy a house, live in it, buy another house, make that one a rental, move your way up. That's how I did it. I bought one house every year. That is still a feasible plan. I know they could make money based on their mortgage, what it was, and what that house could. If they moved out of that house today, they only put 3% down on their mortgage. I know if they moved out of that house today, they could rent it, cover their mortgage, and probably make $200 a month. Are you going to get rich and retire on $200 a month? No, of course not. But if you keep doing that every year and you can manage those properties yourself and you reduce the principal amount, your equity goes up and rents go up. Rents follow inflation. That's another reason when we get into these weird times and inflation shoots up, well, so do rents. So you're insulated. Real estate insulates you against inflation. So that's my quick take on stocks versus real estate. I wanted it to be a little bit quicker, but that's my quick take on it. Let me know your thoughts down below. Are you a stock person? Are you a real estate person? Because most people tend to be one or the other. I was trying to mix the two, and now I'm done with the stock market. I'm not going to put any more money in there. I do still have some debt on some of my properties. I'm going to start paying off debt. I'm going to leave my $100,000 that's only worth 80 in the stock market. I'm going to forget that it's there. And now all the money I make, my real estate commissions is going to pay off debt. So that's my plan going forward for at least the next 1 to 2 years. What are you guys doing? Leave me a comment and let me know what you want to talk about. Let me know if you want me to make this into a series. And if you go watch this, over here, I'll put a link to my 2023 real estate predictions over here because I did my own predictions. I'll see you in the next video.